So we're going to go through a trading plan, and the reason I'm doing this is because I want to put on 20 trades in the micro futures S&P 500 contracts I'm going to be trading in the future. I'm going to make a bunch of videos about that as well. And the reason I'm doing this is because Mark Douglas talks about in his book Trading in the Zone how the only way to become a consistent profitable trader is by sticking to one plan throughout the whole time and just staying with it. That's how simple it is. How many times have you got into a strategy and you're thinking, okay, great, this is perfect. It works a couple times for you. You're thinking, fantastic, this is amazing, this is it. And then maybe you go on a run of 3 or 4 losers in a row. All of a sudden, that strategy's not feeling too good, right? Maybe this shiny little thing over here this guy's talking about looks pretty good too. I can tell you with experience, that part doesn't matter. It honestly doesn't even matter what strategy you have for the most part. As long as you stick to it consistently, you're going to find a lot more success than moving around from strategy to strategy. So I'm going to actually break down what the strategy is, and then we're going to go through and show you how simple it is to actually make a trading plan. Basically, what I want to see happen, and what I see happening over and over and over again, and I believe works really well, is the increase in volume that I see down here on a 5-minute chart, and then this push up over the 15 EMA. That's the white line here, the exponential moving average. Now, you can see that it happened here, and we had a nice push up, and then it broke down a little bit. Well, as we come back down to that support level, we get this beautiful pin bar. I love pin bars, especially if you're going like upwards, right? And a huge rush of volume, and then a crack over this 15 EMA. Entry would be like right here on this green line. You're just, okay, we cracked the 15 EMA, let's go. And then look how it just stays away from that 15 EMA and consistently just keeps moving up over time. And then as it crosses back over, I would want to exit my final position probably on that point. But I'll break that down for you. That's how simple it has to be. A nice push of volume and a move up over the 15 EMA. Now this is for day trading, right? So we're on that 5-minute chart. Now, if I wanted to make a trading plan, what does that entail? Well, it's literally just sitting here and writing out what it is that I just went over. So we have it here, futures trading plan, day trade, right? Now, this doesn't look all fancy because I'm doing a video here and I'm writing it out, but basically this is all you need. I just want to get across, it doesn't have to be confusing and difficult and strange and this elaborate plan. It just has to be a simple plan that writes out exactly what it is you're looking at. In fact, the simpler, the better. So we have volume. That was obviously my most important. I want to see a large increase in volume on the 5-minute chart. Best if you see stair step increase with 3 candles. So a lot of the times what I see here is, what does it mean by a large increase? If this obviously isn't very large. It's, it's kind of just average, right? But we can see here, this was a really good increase. This one obviously not so much but by the previous, but this is obviously a huge increase in volume. So there's a lot of volume coming in here and just the natural characteristics of a pin bar. It means the price was all the way down here and then very quickly people rushed in to buy it and push it. That's something that I want to hold on to. If we look here for stair step, like this is kind of a stair step volume, right? 1, 2, 3, and it increases in three stairs right away. That's usually a pretty good sign for me as well. So a little bit of a bonus if I see that 3-step. So that's it for volume. Then we get the 15 EMA cross. I want to cross the exponential moving average. I want to cross that 15 EMA, that white line. That's important to me. I like it. And you can see the price respects that a lot of the time. I mean, go on any chart, right? Like look at the 15 EMA here. Look how the price just kind of crosses it and then it just comes up below a little bit beyond it and then comes back down, comes up a little bit beyond it and comes back down. I find the 15 EMA for me personally makes it nice and simple to see, okay, it's above it and we're making a nice move. I want to be a part of it. So for me personally, that works out visually very well. So I got to cross that 15 EMA with volume. Bonus if there's that pin bar touching that I was talking about before. The price maintains itself over the 15 EMA, so I want to see the 15 EMA get respected the entire way, and we just get that slow, nice, methodical move up. That's what I want to be a part of. Now here's where something pretty cool, where Mark Douglas talks about trading in the zone. If you actually get a profitable trade, then here's how he handles it, and I really like it, and I think it's worth it. So you always want to have at least 3 contracts. Whatever it is, you want to be able to divide it into thirds. So if you're trading, just stocks or options or whatever, you want to have 3 of them at least so that you can break it out into threes. So if I'm trading the futures contracts, I have 3 contracts go on. One gets taken off right away on a 3-point increase. And then one more contract gets taken off at the next profit zone. I'm going to show you this. And then once you have 1 contract left, you move the stop up to entry and you have a risk-free trade. If you get a nice push up, begin to move stop and trail price just below dips as you go. Okay, so I'm going to show you exactly what that all means. If I was to enter right here, right? So if I was to enter right here, actually there was a good one the other day. So here, right? So say we have an increase, we're down, we have an increase in volume, we pop up over that 15 EMA, and I'm like, okay, I'm going to enter into this thing. Well, he recommends the first contract gets taken off almost right away, as soon as you get like a 3 or 4 point move. So say you entered right here, 58, and then you get all the way up to about 62. You're thinking right there, first contract, boom, I'm going to take it off. That's so that if the trade ends up coming back against you and it doesn't work out, like it did over here, right here, right? We had a nice move, 15 EMA. I would have sold one off right here, and then it ended up coming against me. So I end up getting out. Well, that selling that 1 contract right there worked out well for me because I just mitigated some of my risk. Then at 1 contract's gone. Then as we get this big push here, we want to look over and we want to see where's previous profit zones. So this was obviously a level, right? So I would draw a profit zone just below. I don't want to reach for the tops all the time. I want to go below it so that I can be part of the move. And I would get rid of 1 contract here. So we have 1 off here, and now we have another 1 off here. At that point, I only have 1 contract left, so I'm going to move my stop. This would be where the stop is originally. I'm going to move my price up to entry, right? So now my stop's up here. This last contract is on entry, right? And then I'm going to let it run. Now, for me personally, that actually creates a risk-free trade at this point, which is great. But me personally, as we go through these dips, so we get this nice push up here, I probably would raise it to here so I can at least get a bit of profit off of that as well. And then as we got this second push, I would probably be raising up to here and thinking, okay, we dip down to here, let me bring it just below, and then eventually we come down below, and that's me 3 contracts out, I'm out of the trade. Hopefully that makes a lot of sense to you. Anyway, I don't want this video to go on for too long, but I just wanted to get across how simple it is to actually create a trading plan, and I highly recommend it because once you write something down and you actually understand what it is you want to do, it makes it a lot easier when you go to see it. I would almost recommend as well taking a screenshot of what this looks like. This is a perfect trade for me right here. Nice move, volume, over the 15 EMA, push up. I would be getting 1 out here, I'd be getting 1 out here, and then I'd be waiting to see what happens, moving my stop up, and I would have my final contract would be here, and it would just be continuing from there and see how far we can go with it. So this right here is a perfect trade. So you could screenshot that in and put it into your trading plan so visually you can see it. Anyway, I highly recommend reading the book, Trading in the Zone. It's going to really help you out. And if you're interested in watching me go through these 20 trades that I'm going to be putting on, subscribe now. I'm going to be putting out, 1 of 20, 2 of 20, and just keep going through all the trades so that I can find that consistent approach in day trading and help you out as well. So thanks for sticking around this long. I really appreciate it. Like and subscribe if you don't mind. I'll catch you on the next one.